The Business Advisory Group presents a webinar series, Surviving, Thriving, and Growing Your Business Through the Pandemic. Each of these webinars features New England Provisors members. The Business Advisory Group connects professional expertise within the Provisors Network with the resources that business owners need to improve the value, efficiency, and profitability of their businesses. Each of the sessions, starting on September 29 and continuing through November 18, feature provisor experts in each of the categories noted. All of the sessions begin at 2 p.m. Eastern and will be rebroadcast over our YouTube channel. We hope you enjoy the sessions and contact each of the experts if you have questions that are important to you as a business owner. Thank you. Hello, this is Warren Rutherford. This is the second in a series of weekly webinars for business owners, and it's all based around the theme of surviving, growing, and thriving through the pandemic. The series is starting with 8 topics, and from here on, each Wednesday at 2 p.m. I'm Warren Rutherford, owner of the Executive Suite and your moderator for today's session of Finance and Operations Management. Today, we're going to discuss cash forecasting, business planning, and leveraging your team in the pandemic world. But first, a few suggestions for the session. On the top of your screen under View Options, we suggest that you uncheck side-by-side mode and set the zoom ratio to window. Thank you. So with us this morning, depending on where you're tuning in from, are Peter Armanetti at the Navera Group, Mark Parent at MAP Advisors, and Dominic Grew at Elevate Business Coaching. And we have as our co-host Lee Adelson at the Bulfinch Group. Before we begin, let's have Peter, Mark, Dominic, and Lee introduce themselves. Peter, why don't you start it off?
Hello, everybody. I'm Peter Armanetti, principal at the Navera Group. We provide interim CFO services to middle market companies. Our work is kind of in 3 different buckets. If a CFO leaves a company, say 20 million to 200 million in revenue abruptly, and there's a lot going on, and you need somebody to jump in for a few months while they do a search, that's what we do. We do a lot of M&A work as well. That's usually with smaller size companies, 20 million in revenue and under. If investment bankers or business brokers are going to sell a company, they'll a lot of times advise a client to hire us and help them get their financials based on accrual-based accounting versus cash-based, help them go through due diligence, management meetings, get that transaction over the finish line from the finance chair. And then the third bucket is turnaround, workout, distress, bankruptcy, liquidation work, which is really topical for this discussion. That's why I'm here. Hello, everybody. Thank you.
Thank you, Peter. Mark?
Hi, everybody. Again, thanks for having me actually on this. One of the things I was thinking about was there should be an appreciation for the information that you guys are getting out to everyone in this series, and I for one appreciate it. I'm Mark Parent. I'm with MAP Advisors, the president. I do COO and CFO work for companies typically under $10 million, typically owner-managed businesses. I focus a lot on putting dashboards together for these owners so that they can get a good pulse of their business without having to spend a lot of time getting the information themselves.
Thank you, Mark. Dominic?
Yeah, good afternoon, everybody. I'm Dominic Grew. I'm the founder and the owner of Elevate Business Coaching, and I'm a certified focal point business and executive coach. I work with business owners and professionals to help them accomplish their business goals, get the results that they want faster and with greater success than they would if they were trying to do it on their own. Prior to launching my own business, I spent my career in the corporate world. I built and managed remote teams, I guess, since probably about 2008, way before Zoom and work from home and the words pandemic became kind of mainstream in our vocabulary. So happy to be here.
Thank you, Dominic. Lee?
Thanks, Warren, and good afternoon, everyone. Thanks for joining us for today's session. I'm Lee Adelson. I'm a financial advisor from the Bulfinch Group. I provide uncommon thinking to yield uncommon results for business owners by implementing insurance strategies to attract, retain, and reward key employees. Also to help business owners during their transitions due to growth, sale, succession, and retirement. Thanks for having me today.
Thank you, Lee. And as I mentioned earlier, I'm Warren Rutherford, owner of the Executive Suite, and I provide talent assessment systems, executive recruiting, executive coaching, and training to businesses. For today's session, Peter, Mark, and Dominic will lead a discussion on cash forecasting, business planning, and leveraging your team in the pandemic world. We ask that if you have questions, please list them in the Q&A box, and Lee will pick them up during the session and present them to our panelists. And a reminder to all of you that our session is being recorded. Thank you. So gentlemen, let's begin. Peter, I'd like to ask you first, what is the most important barometer for a company when times are tight? Is it the P&L, balance sheet, or cash flow?
So, P&L and balance sheet are looking backwards after the period's end. It's really a cash flow forecast and not the cash flow statement that you issue at the end of the year or the auditors would issue. It's a operating weekly cash flow.
Okay. And how does that tool help an owner manage cash flow more effectively?
Well, it is I'm pulling up on my screen. I'm going to kind of display the model and how it works and how they build it. Basically, it's in a simplistic view, cash in and cash out on a pure cash basis, because when times are tough, like they have been in this pandemic for lots of companies, you're surviving, not quarter to quarter, but you're surviving week to week sometimes on your cash. So it's a very important planning tool for companies when things are tight. It's an important planning tool when companies are doing well as well.
Okay. And in this process, how often should the cash forecast be run, and then how far out?
So the standard, is really a weekly model that you look at 13 weeks at a time, which covers a quarter, but you build the model out, for a full year pretty much, or at least 6 to 9 months at a time, so that you can have, kind of a shorter range view and a longer range view. Because you can avoid things 6 months down the road that you're forecasting if you take action on them today. You don't know about them until they happen. It's too late a lot of times.
Okay, that's good. And with your vendors, what do you need to explain to them as it relates to that cash forecast?
So this is always a sticky situation with vendors. They often have an inkling, right, that something's going wrong because they're getting paid slowly or not at all, or they're getting a different story from different people they talk to. So my advice to companies is always to be as honest as you can and tell everybody the same story of what's going on. You don't have to remember what you told vendor A, B, and C and what story you made up. Stick to the truth and divulge as much as you can. And come up with a plan of action for them that, okay, I can't pay you today. I'll get back to you next week with a payment plan. Whatever your timetable is, over communicate, because ignoring them is just going to make them nervous, worried, and start the rumor mill.
Okay, that's great. Now, for a non-finance guy, which is what I am, could you go through a little bit on how that cash forecast is built, and where do you get the data? How do you use it? How do you make sure it's accurate?
Sure. I don't want to get too granular, but I want to spend some time on, this is not a back of the envelope, some accountant sitting in a room in a vacuum making estimates. This is going to be a planning tool that is going to tell you, if you do it right, within 95% accuracy of what cash you have, where you're going to spend it, how you can spend it, when you can spend it. So again, it's just cash in, cash out. I put revenue at the top of these all the time, even though this isn't cash. This turns into cash when you collect it, just so that on the face of this cash flow, you can see what your billing is each week. Normally, when we build a forecast, you want to have at least 2 to 3 months of actuals laid in. And I've got that grayed out here in the first 13 weeks of this example, because to tell you, you need your run rates in the past to forecast what you're doing now, what you're going to do in the future based on how business is changing and evolving. So AR collections, you'll see this is a very simplistic model, but I do have some tabs that have more detail on them. And depending on your company complexity, you may have 6 or 7 or 8 detailed tabs on your cash flow. You may have 2 or 3 or 4. So the receipts detail is laid out with the 10, starting with your sales, because you're going to collect this money, 30, 45, 50, 60, 70 days, whatever your average DSO is from your customers. So when you first start this out, you want to do, we're in the actuals here, but when you're rolling out your forecast, even though these numbers are all the same as an example, you want to take your accounts receivable aging starting and then lay that out by week how you think it'll collect. And then from there, you're going to do a formula of, okay, I collect my cash in 60 days from sales. So your formula would go back 60 days from there. And that's how you forecast your receipts. Now, you want to make sure, like, your receivables, let's say they start out at $500,000 and 150,000 of that is not collectible for some reason, or it's got a real problem. You don't want to show yourself collecting that money in the first few weeks because you're just kidding yourself. So you have to be real honest and be as, I wouldn't say pessimistic, but you don't want to be overly optimistic in doing these forecasts. Then when it comes down to other line items in here, all your expenses, right? You've got payroll is a major expense for all companies. If you're a manufacturer, you're going to have materials. This payroll line, again, not an estimate. I like to have payroll as a tab and have every employee listed by name, their salary by week. And then when we need to make changes, we're going to do a 10% cut. We're going to lay off 3 people. We have to hire somebody, whatever it is. You're laying in the actual numbers and changing them so that now you go back here. Again, it's not an estimate. It's very accurate. The other tab that I have, if this were a manufacturer, is I would have my raw materials, my major vendors, and maybe more than just my major vendors, because these amounts in here that you're forecasting and that the actuals are going to hit, you're actually going to use this tool each week to do your check run selections. Yeah, because you don't want to just do that in a vacuum and we're going to pay these people. No, we're using this cash flow for a tool to plan and forecast and what we can spend, not go spend it and then go back and say, oh, geez, I guess we didn't budget that much. This is not a budget either. Don't get this wrong. This is a forecast, and this is a strict planning tool that should be adhered to when you're in tight cash times. The other thing I want to point out on here is, in addition to this cash flow, at the bottom, most companies have a revolving line of credit that's based on an asset-based lending, either accounts receivable and inventory, or just accounts receivable if you're not a manufacturer. And you have advance rates on that every month, and you do a monthly borrowing base. Well, here we're doing it weekly, and we're rolling that borrowing base so that we can see down here the bottom line, what's our availability on our revolver. And lo and behold, as you're projecting this out towards the end of the year, based on what we think revenue's doing, expenses, we're going to be negative on our revolver. And that's never a good thing, because banks don't like over advances. So you want to make sure you roll your collateral. If you didn't have a borrowing base, you would simply, this ending cash balance line would be the bottom line for you, which you want to keep your eye on and hope that doesn't go negative. You got to keep it positive. And
so that's a good point, Peter. And so your bank has to get involved at some point. So with this rolling forecast, what do you tell your bank and when? And then how can you get them to help if possible?
So good question. And I know last week's presentation was from the banks, so a few of the bankers. And I can tell you from experience, I've been doing this for 20 years. Banks don't like surprises. They simply don't. So the sooner the better. And unfortunately, most companies try and mask issues and problems with their cash flow or their collateral or their revenue or the results from banks, because they just think, oh, things will get better. We'll be fine next month or next quarter. But when you can forecast yourself having a problem with cash, with your borrowing base, with your collateral, the bank will appreciate the phone call, and you have a far better chance of them working with you versus clamping down and figuring out how do they get out of this loan.
Sure. I wanted to stop for a second. Lee, did you have any questions in the Q&A from our audience?
Yeah, one of the things that they're observing is, Peter, you're looking at a forecast of 13 weeks. So you know what your cash flow is going to look like from an from inside the company basis. The bankers said the same thing from an external standpoint. They want to know that you're on top of these things. So it's great to see the consistency from that standpoint, from internal for you guys, as well as what the bankers presented as well. One of the questions is, what types of things will the cash forecast help you point out, aside from just deficits or surpluses?
So it's going to point out, so initially the revenue line, let me be clear on this too, the revenue line belongs to the sales team, and that drives this whole thing, right? So it's not the accounting department or the finance person making up what the revenue is going to be based on what we did in the past. You need to build up a detailed plan, a forecast for revenue, so that's the starting point, right? Because the cash flows from there. So it's going to point out, oh my God, we've got a huge hole in Q3 for revenue. How are we going to fill that, right? Or if we're a seasonal business, we've got, we're doing great in the spring and summer. The fall kind of tails off, and in the winter we have no cash coming in. How do we time our cash or preserve our cash for the down season if you're seasonal? The other thing it will point out is how much you're spending on certain things that you kind of never really thought of. When you really dig down and get granular, you could find some expense cuts in here that you might not otherwise think of. When you add up a couple thousand here, a couple thousand there, all of a sudden you can save $20,000, $30,000 a month on things that you don't really need when you have to pare back.
Thanks,
And
Peter. Go ahead, Lee.
Peter, when you look at that, when you see that those cash flow issues, what are some of the other ways that you can improve cash flow on a rolling average like this?
Well, ways to improve cash flow when things get tight, you can start thinking about things such as, well, we've got some inventory that's aging or whatever. Why don't we just try and sell that at a little discount? Because you might not do that in normal course, but when you need cash, you got to get creative. You may increase some scrap. You may figure out you have to increase prices because that's part of your problem, or you have to cut expenses in other areas, or there are other opportunities within companies to sell other assets besides inventory that you may not be using. So there are areas you can uncover to create more cash.
Right. And I would imagine the opposite would be true, that when you start to see surpluses, that you can plan accordingly for going forward as you track those.
That's a good point. So, if you do start improving or you're doing fine as it is and you're in growth mode as a company, you're going to forecast out, well, we should buy some new equipment or we should do this and that. Well, if you don't put it in a cash forecast and see what your debt service is going to be, or at the end of the year, you've got a business owner say, he wants to take a $500,000 distribution. Well, what does that do when you roll it forward the next 6 months? When you took that $500,000 out, is things going to be tight and you're going to go negative 3 months from then? I know small business owners tend to look at their bank account and say, oh, I've got this money sitting there. I want to take it. And this is a good planning tool to use in a growth mode as well.
Thanks, Peter. Mark or Dominic, before we move to the next session, any comments, questions for Peter based on your experiences?
Yeah, I just wanted to make a comment. That was great information, Peter. Thanks. A lot of businesses, they forget the balance sheet. There's a lot of moving parts in the balance sheet, and if you're not paying attention to those and you're not building into your cash forecast, you could have some significant problems. And I know, this might seem like a lot of work to do, but in every situation that I use this, and I get my clients to use this, they feel so empowered by having it. You're looking 13 weeks out. You could go further than that. And if you see bumps in the road, now you have time to adjust. You can do things to your business that makes that bump go away. And so I suggest having something like this put in place, and to make sure it gets done and continues to get done. It's such a powerful tool. Don't lose track of your cash.
Yeah, I just want to kind of emphasize one point too on this. You build this forecast, you put your actuals up to the week where you are. Like if we were doing this right now, I'd have actuals up through last Friday. And then every single week you update this for the actuals for the week that passed, and you make changes to every single week going forward in the forecast that you know about when you're updating those actuals. This is not something it's not a budget. You don't set at the beginning of the month of the year and say, okay, let's compare against it. No. This is a live document. Every week, actuals updated, forecast changed, looking out 13 weeks, looking out 6 months, seeing what's going to hit you in the future or where we're going.
Thanks, Peter. Dominic, question, comments before we move on?
I mean, this is great. I'm thinking about it. I liked our, in particular, Peter, when you showed that tab where you had the payroll costs, right? Because we know payroll is a big expense, but it actually takes it down to that individual employee level. And in terms of surprises, again, that's what this is about, to try to smooth things down, to get in front of things before they happen. And that, I'm guessing that process of a weekly putting the actuals on there is really important in this whole process about actually living this plan, I guess, every week, or this forecast.
It is. And when you do this forecast, you talk to almost everybody in the company that has an impact on cash, because again, you don't do this in a vacuum in an office. You're in the accounts payable drawer, looking at vendors, who history. You're talking to purchasing, you're talking to sales, you're talking to everybody in the company that impacts cash and how it's going to accurately build your forecast. So you're involving the whole company. And then I think that kind of lends itself into the discussion we're going to talk about next with Mark and yourself of now, how do you get everybody to buy into this plan? And then how do you make changes to your business going forward based on this?
Peter, thank you very much. And for the uninitiated to spreadsheets, I often call these three-dimensional formats, but all of these sheets that Peter has been referring to are linked to the master spreadsheet. So it's not easy to do, but once you know how to set it up with experts like Peter and Mark, it makes your life as a business owner a lot easier. Peter, thanks an awful lot. Now let's go on and ask Mark about business planning. So Mark, now that we've figured out our cash, what's next?
Yeah, and just one last quick point on the cash forecast. I actually do it personally too. Peter, you probably do the same thing, but I have that forecast set up for my cash. I love to look at it. It's that important.
You have more cash to worry about than I do, Mark.
Well, I don't, yeah, I don't know about that. Me personally, I don't know. My family, yeah, maybe them. So when you've figured out the cash, right, which is a huge thing. If you don't have enough cash or you don't have enough runway of your cash, you got to solve that problem first. But once you do that, you have to think about planning. You know, where's your business going? And I always think about my plan for my business as a roadmap to someplace. I'm going to California. I'm taking a trip there. How am I going to get there? I like to visualize that my goal is something real. And if you think like that, you think about what it takes to actually make your trip out to California. And your annual plan should be similar to that. So when you think about an annual plan, think about the timing of it. You know, right now it's October. I like to start with strategic sessions first. And strategic sessions, typically you want to start in the August, September timeframe. You know, think about slower times of your business and taking advantage of some of that slower time to get together with the key people of your business to step away a little bit and think strategically. One point is to think about maybe having someone like Warren or Dominic come in and be the facilitator of that strategic session. A lot of times people get bogged down on paths that they shouldn't go down. And it's nice to have somebody from the outside kind of facilitate all of that. Make sure you spend enough time or set enough time aside to do this properly. You know, you should be thinking about the strengths and weaknesses of your business. You should be thinking about your mission and your vision, thinking about pivoting, right? There's a lot of crazy things happening, even businesses that are doing really well. How do you capitalize more on that? How can you pay attention to your business properly? There's on the upside and the downside, there's a lot of strategic discussions that should be happening.
Mark,
and so
I'm sorry, go ahead.
Yeah, go ahead.
No,
Yeah.
I was going to ask you, what should the end results look like from business planning? I know you mentioned that trip to the West Coast, and we certainly don't want to go into the wildfire area, but what do you look at for end results from that business planning process?
Yeah, so a couple more steps in the planning process. You know, you have your 3-year plan. Once you finish your strategy sessions, you have to think about midterm. Beyond 3 years, it's kind of fuzzy. I mean, 3 years out is pretty far out anyway. But you should have a good 3-year plan as to where you want your business to go. You know, think of each one of those years as an overnight stay someplace. And then you eventually, once you've gotten your 3-year plan in place, then you move into where your budget is. And your budget, you know, typically the November, December timeframe is when you can get into that. A lot of my clients, we're starting it now. We start in October. You have a little bit of breathing room, but we'd like to get it done by the beginning of December, just so it's ready on January 1st. And then once you have that budget done, then you get into what are the end results of all this? You know, what should you physically have? Think about your strategy sessions. Make sure that's all documented, because next year when you come back to this, you should be reviewing all that documentation before you're meeting again, and think about what you've already thought about again. Should be going over your 3-year plan. It should be all documented, and your budget should be all documented. Now, the thing with the budget It shouldn't be all just financial statements, your P&Ls, your balance sheets, and your cash flow. It should be about what is your business going to achieve this year? What is your marketing department going to do? What is your sales department going to do? What is your operations going to do? What does inventory look like? All of these things should have metrics, and you should be able to grade yourself on all of these metrics. So if you don't have all of this in writing, it's tough to sign up for things. It's tough to grade yourself as you go through the year.
And earlier, Mark, you mentioned discussing strategy with your team. So, and you said starting up about now for that senior team to get together, but how frequently should the team get together to discuss and or modify the strategy based on what you see on the ground?
Yeah, that's a very individual conversation in terms of, where your business is. If your business is doing poorly right now, you should be meeting every day. You should be meeting all the time to figure this thing out. And it's a little bit more frequently. Some of the businesses that are doing really well, they're forgetting about these strategy sessions, and they're forgetting about paying attention to it.
Hmm.
And you can run into problems there too. You think you're doing well and having a great time, and then you look at Peter's cash forecast and you realize, well, I'm doing more business, but I'm actually losing money. So if you're not paying attention to your business, and if you're not looking at it from a strategic standpoint often enough, you're going to be into problems. And so I definitely recommend there should be strategic sessions at least once a year where you're getting away for a couple of days to really think about your business. And then there should be check-in points at least on a quarterly basis. A lot of companies have board of directors meetings and things like that, but they forget to think strategically on a regular basis.
Okay. And you mentioned having those regular meetings. What do you recommend for that business holding itself accountable to its plan?
Yeah, so at the end of every month, everyone's signed up for something, and they should come back with how they did versus that plan, and they should explain what the variances are, and there should be open discussions on what do we need to do to make changes to either get back on track or to take advantage of some opportunities that maybe we didn't recognize. And so a good habit to get into is at the end of the month, all the folks that are responsible for whatever part of that plan should report back to their managers or to the owners as to how they did. And then there should be dialogue and conversations about what happened and what changes need to be made.
Okay. And Lee, I see there's a question, if you want to ask Mark.
Right. Yeah, thanks, Warren. And it goes to what I talk about with my business owner clients a lot of times is spending time working on their business while they're working in it. So Mark's making a great point that can frequently be omitted. And the question comes down to, how do you organize these strategy sessions and keep them on track and stay productive?
Yeah, so that gets back to having that facilitator, right? Sometimes it's hard if you don't have the right mindset, it's hard for that person who's trying to lead it to be a good facilitator. You're a little bit too close. And so a lot of times I recommend folks bring somebody in from the outside to do some facilitating of the meetings. And you'd be surprised how they can contribute as well. They've done it so many times. They kind of know where the conversations are going or where they should go.
And what kind of time frame should it be to update your plan so that as you see forecasts go up and down or sideways, how often should you look at that and review that?
Yeah, so at the beginning of the year, you should have your plan in place. Your budget should be in place. And if it's after the month of January and things have significantly changed, well, you probably did a bad job of planning, or maybe something happened that you just was out of your control, like COVID, right? That could have happened. Once something significant happens, you need to go back and you need to reforecast. If something doesn't significantly happen, usually at the end of the first quarter, at the end of the second quarter, you're looking at reforecasting things.
Mark, thank you. And Lee, thanks for fielding those questions from the Q&A group. You mentioned COVID, and I just wanted to ask you, how do you look at the pandemic now into our 7th month and ongoing? And how can you take advantage of new opportunities? Maybe a look back and then potentially a look forward.
Yeah. So with your new opportunities, oh, I got a train coming by. I don't know if you can actually hear the train.
Hey, Mark, is it on its way to California?
Well, it might
Good,
be.
yeah, I'm just kidding.
It's a little bit delayed. So if you didn't build that into your plan, and
There you
you know your wife's or your husband's supposed to pick you up at the train station, you're going to be late. So this is kind of tough times these days, right? For companies, and they're thinking about pivoting. They're thinking about how do you move your business to another direction. And so some of the criteria that you really need to think about is um, the new opportunity that you're thinking about. Can it survive past COVID? Once, and I'm hoping COVID is, in the rear view mirror at some point. I don't know when, but I'm hoping it is. Is this new opportunity, this new direction, still viable? If it's not, then you have to think twice about heading down that path. The other piece is don't make it too far of an extension of what you already do today. You may have to, but try to think about natural extensions of your business so that you don't have to just recreate everything. That's almost like starting a new business and can be time consuming and pretty dangerous. So try to get something that's close to what you already do. And then the last thing is you got to have something that's sustainable, and you have to have something that's going to be profitable. If it can't have sustainability and it can't make you money, then you ought to not go down that path. But brainstorm, have some, again, facilitators could be helpful, but brainstorm and think about how to put some structure around what these brainstorming ideas are. And a good brainstorming session usually starts with no barriers. Anything can be put on the table, and then you start boiling it down from there.
Okay, thanks, Mark. Dominic and Peter, questions for Mark, comments before we move on to the next session with Dominic?
No, for me, nothing pops to mind at the moment. Dominic?
Okay, Dom?
I just thought it was really interesting, Mark. There's a lot of thought that goes into the business. There's the day-to-day, there's the survival mode, but just a couple of things that you said there about opportunities, about sustainable, and brainstorming and things being a natural extension of your business. So not having to totally reinvent, but just maybe extending or rethinking what you have already. I thought that was pretty powerful.
Yeah, if you have a retail store, you think about, is there a way to set it up that folks are just pulling up into your driveway and you're loading the goods up into your car? And a lot of companies have headed down that path, but it's a natural extension of your business. And so you think about that. You think about being clever without drifting too far away from what your core business really is all about.
Right.
Thanks, Mark, for the insights into that need for business planning. So in the next segment, we're going to have a conversation with Dominic about how you can leverage your team. So Dominic, first question up, how do you keep your team motivated and productive?
Yeah, that's the big question of the day, right? How do you keep your team motivated and productive? And just to backpedal just a little bit on what we've heard already from the first two speakers. So Peter's talked about the survival mode, about your 90-day your cash flow, your forecast, and that's important. And Mark has talked about the business planning, where you're, I guess, coming out a little bit from the day-to-day, and you're looking forward and really thinking about where can you bring your company next. So it's very important to have money, and it's great to have a plan, but your team are actually really, really important in making things happen, whether that's surviving or executing. So that's the first kind of point I want to make. Your people are critical. You cannot be successful in business without your team coming along with you. In fact, in last week's session, when we had the bankers on and they were talking about how they, will meet with a business and they'll want to see their 90-day cash flow forecast, they talked about actually evaluating the management team's ability to execute on the plan. So money's very important, the plan's very important, but it's not enough. You have to have the team to execute it. And in terms of motivating your team and ensuring that they're productive. In my experience, it kind of comes down to two things, really. And the first one is very basic, but very important, and that is you have to know your team. To motivate your team, you really need to understand and know what are their motives. And by that, I mean beyond just why they come for a paycheck. As a business owner or a business leader, you really need to take a step back and ask, what do I really know about the people that come here and work for me? Mm-hmm. Find out what's important to each of them, what drives them, and also sometimes what might hold them back. Ask them, have conversations with them about concerns that they may have about, you know, the environment that we're in, where the company's going, and about things that might be perhaps impacting their ability to perform and contribute, right? We all know we've been living through this crazy time. There's nobody out there that hasn't been impacted in some way by this whole pandemic. So really getting to know your staff, have those conversations with them, find out what's keeping them up at night, what drives them, what motivates them. But, you know, how do you motivate your team? Know and understand your team. And that most important question of all that you've got to ask your team members is, what do you need from me for you to be successful in your role? And so I kind of suggest to leaders, managers, business owners, but if this is something that maybe you haven't done in the past, you know, you kind of say, well, I don't need to get to know these people. Now's the time to be really intentional, because there's never been a time where you've relied more on your employees. So the first kind of point is know your team. And if you haven't done that so great in the past, that's okay, but be intentional going forward, as that's something that you really need to do.
That's great insight, Dominic. So next question I have is knowing your team and motivating them and getting them to be more productive kind of suggests that communication is very important. So what types of tools do you suggest that would help improve communication, particularly during the pandemic now?
Yeah, I mean, there's lots of tools that are out there, right? You've got Zoom, you've got GoToMeeting, Google Hangouts, Instant Message, Slack. The list kind of goes on and on and on. And, you know, it's interesting because when I speak to business owners and I ask them what the challenges are in their business, you know, communication is typically in the top three, right? So we have these tools, but it's still a big problem. Yeah. In fact, they say, I think it's like 80% of your communication doesn't actually get processed by the person on the other end in the way that it was intended. So it's even more important now, right, in this pandemic world than it was before. So I tend not to think so much about, you know, the tools for communication, but how can you get really good at communicating more effectively? So I wanted to kind of put out there, you know, 4 or 5 tips that I have that I've come across, and they link into what Mark and Peter talked about a little bit earlier about when you have the plan and you're doing business planning and so on. And the first is, like, when you're communicating with your team, you know, be really clear. Clarity is absolutely key. They should know where you're going, where's the company going, why it's going there, and how you're planning to get there. And so be really clear with them, and be clear also that they understand their role, right? What role they're going to play in that whole exercise, and your expectations of how they're going to do that effectively. But number one is just be really clear. And that benefits everybody. The second thing is, and Mark, you kind of mentioned this earlier, when it comes to business planning, but write things down. If something's so important that it's key to the survival of your business or to your business growing and thriving, and it's been worth getting brainpower around you, write it down. Write it down, because what happens is it's going to make it clearer what the plan is, what's being decided upon. It also tells you that it's worthy of being memorialized by actually being written down. And let's be honest, the reality is, in today's society, we are bombarded constantly at home, at work, by all these tools of communication. So you need to say things again and again and again sometimes until it begins to, you know, work its way through. So write things down. The third thing that I've also found really effective, and it's not so much a communication, but it's more of a time thing, is designate time slots in your week where you're going to have a discussion. Now, this could be a team discussion perhaps something like what Peter mentioned earlier about the 90-day cash flow, but have a slot where you're going to sit down and really go through the issues that have come up during the week. So everybody's engaged, everybody's involved, everybody hears the same thing together. But it's very efficient if you have it in one clear time slot where there's a defined agenda. The other thing, and it goes back to kind of knowing your team, is if you are able to try to have a one-to-one slot with your team members, a 30-minute slot where maybe Peter, you know what, I want you to feel like you're so important to what we're doing here. I want to have a slot where we check in with each other once a week. If we haven't spoken, we're going to talk, and it's about what's come up during the week. So what does that mean? It means that Peter knows that he has a slot. He doesn't have to pepper me with stuff going on all the time, but we have a time where we can have that discussion, and he can be efficient, write them all down. We can hit them hard. It also lets Peter know that he's very important to me as well, and that his role is critical to what we're trying to accomplish. But I actually carve out half an hour where we talk, and I get to know him better. And then the fourth and final thing is just be intentional when you're thinking about communication. The old one, like, ask yourself, who needs to know, right? Because yes, we're talking about leveraging your team, but the same conversations and messaging is probably also going to apply when it comes to customers and external partners as well. So just be really purposeful and intentional. Like I said, 80% of communication gets lost somewhere, and it's even higher than that right now in this decentralized or more remote working that many of us find ourselves in today. So I'm just going to take a pause there.
Dominic, if I could put an excellent a punctuation on that. It also makes Peter accountable when he has a one-on-one with his manager once a week, so that I have to get stuff done. I have to update him on different things and my ideas. So I just can't go off and hide in the weeds, you know? And one other thing I just want to kind of to wrap this whole thing, what just struck me, Dominic, about what you said, that cash flow is a tool, right? You can't execute it without all the people. And I can tell you from working with distressed companies for 20 years, every company that I go into, upper management thinks, nobody knows. We'll be okay. Let me give you some insight. Everybody in your company knows. Eventually, the receiving guy knows. The inventory people know. Everybody knows things are slow, not going at the right levels. They all know. So you're better off. And most companies haven't gone through this because it's distressed companies here and there. This is a pandemic. Everybody got impacted, almost everybody. You got to get everybody on board and rowing in the same direction in order to turn the ship around. To Dominic's point, and you got to do it in the manner that he suggested. You've got to communicate. You've got to get everybody. You can't tell them every little last detail, obviously, but you got to tell everybody what's going on. Here's a solution. Here's the plan. Here's how we're going to execute it. I need your help. Let's go.
Yeah, I'm glad you brought that up, Peter, because on that first question about keeping your team motivated and productive, and I say, well, you've got to know your team. The other leg to that stool is you've got to engage them specifically in the plan. It's not about just getting to know Mark and what Mark likes to do at the weekend and so on. It's got to be relevant to the business. And today, again, more than ever, you've got to be thinking a lot about your business and where you're going. So it's absolutely essential as part of the motivation and ensuring your team is productive that you get their input. Ask them. You know, there's so much information that's known in an organization by those who work there. Make sure that they know the role that they play and where they feel they can be most successful. Involve them in these weekly meetings or whatever it is on the ongoing evaluation of how things are going with the plan. And that means, you know, what's been working well, but also highlighting the points where, you know, they're not going so well. There's been some learning along the way. So really engaging your team. If you think of your team, they're the execution wing, right? They are your number one asset, your differentiator, your competitive advantage. And to your point, Peter, you rely heavily on them because so often they see what you don't see. They are experiencing things on the ground floor because they're talking to your clients, they're talking to your prospects, they're talking to vendors, they're observing what the competition are doing as well. So they're almost like, it's almost like you have your own staff of intelligence gatherers who can be feeding information up to you so that you can gather it around, engage people and have them, you know, come up with the best plan, whether that's survival mode are getting beyond survival mode and actually saying, well, where are opportunities here that maybe we could start to look at and not pivot, but as you said, Mark, you know, extend your business rather than reinvent it totally.
Thanks, Dominic. Lee, I see a question in the Q&A box if you want to ask that.
Yep. You know, Dominic's bringing up a great point about communication, which has been a common thread here, and the transparency to Peter's point about everybody knows. So, you know, this really goes to the question that came up from one of the attendees. What are your suggestions for team members who are feeling burnt out because they are working remotely and feel obligated to be available at all times due to the difficulty of separating home life and work life?
I guess I'll take that one. It's very real. People are feeling tremendous stress these days. And that's why those communication channels are so important. Being able to kind of create that environment where people can express how they're feeling without fear is really, really important. And the tone kind of needs to be set on that from the top, that it's okay. Like, you know, we are all going through this in some shape or form. So I want you to feel like we can talk without fear. And sometimes even the very act of knowing that, you know, your boss who's in charge of you understands and appreciates and empathizes and is going to work with you as best they can with the situation that's just evolving and we're all going through. So I guess the thing that I would say is, you know, that having that good relationship with your employees is really important because you rely on them, right? Mm-hmm. And it's a two-way streak. You need them to be successful in the business, but you've got to have them. You know, you got to be supportive of them and understand their needs and also prioritize those as well. So I don't know if anybody wants to add on to that.
Well, I just wanted to add to it, if I may, Dominic. You know, you mentioned empathy, and the key thing is, you know, while a business owner has to look at the bottom line of how the business is going, empathizing with what the personal issues that their employees are dealing with is key to understanding where their head is at through these difficult times, juggling kids in school at home, you know, having multiple responsibilities as well as the responsibilities at an employer.
Yeah, I actually had a couple of comments about all this. One is, you know, I'm a systems guy, so I kind of like systems. Dominic, you had mentioned managing up. I think it's very important for managers and owners to push the responsibility down for their folks to communicate back up to them. And I like to have people create flash reports where on a weekly basis, they're presenting me with good information on a regular basis. How are they doing versus their plan? What are they doing this week? What are they doing next week? Not taking more than an hour a week to put that together, but it's a great tool to communicate back up. And then you learn things that you didn't think you were going to know. From a empathetic standpoint, you know, managers have a lot of responsibility. Part of the responsibility is to be good to their workers. And you think about how do you communicate? Dominic, again, you mentioned intentionally communicating. When I think about when I need to have a quick response from someone, I make a phone call to them, or maybe I send them a text. If I don't need a quick response, it's through email. And so the next day is fine. I also am intentional in terms of when I need an answer. If it's immediate, I'll say, can you give me a call quick? And I don't abuse it. You know, you have to have respect for all that stuff. And in terms of burnout for employees, it's tough because you might be working more at home than you were in the office, because you could be on Zoom any time of the day. You can be doing work any time of the day. So as an employer, think about ways to create social things. You know, is there social gatherings you can do on Zoom? Maybe there's Thirsty Thursdays on Zoom, or maybe there's a social distant activity y'all can do. Maybe there's, you know, $50 gift cards you give out to people. You got to think about clever ways of motivating your people. And you also have to think about clever ways of getting them to connect to each other. You're talking to your people, but are your people talking to other people? So you got to figure out how to encourage that type of social interaction so they're feeling still connected with everyone else.
Thanks,
If I
Mark.
could add one quick thing, Warren.
Yeah.
From the employee standpoint, because I've been guilty of this in my career, people reporting to me and my head's down and I'm getting lost in what I'm doing and everything else. And I'm not thinking, hey, how are they feeling? You know, if you're an employee, reach out to your manager, because it's not that they don't care. It's just they're so busy. They're not worried that, you know, John is not, you know, he's mentally stressed out or burnt out. Reach out to your manager. He may not be thinking of it. And you'll find out that maybe he does care a heck of a lot about how you do feel and the stress you're going through. So raise your hand. Nobody's going to, you know, react adversely, I don't think, especially in this atmosphere. So feel free to reach out to your manager.
I think that's good advice, Peter. So kind of wrapping up here, gents, one overall question and then looking at key takeaways. So here's the overall question, and if you could be targeted in your response, what do companies need to do now to survive and thrive through the pandemic? Because it's going to be a while. Peter, give it a shot.
What I would say is hope is not a plan. You need to have a cash flow forecast ahead of you to see where you're going and what lies ahead and what you can avoid and what you can't.
Okay.
Critical.
Mark, how about you?
Well, I have a few things. So we mentioned before, you got to have a written plan, and you got to be able to hold yourself accountable to that plan. Communication is huge, and cash is king.
Okay. And Dominic?
Cash is king because you can't do anything without cash, right? But engaging your employees, you know, there is brain power. There's ideas that are in there. You just got to shake the tree and find them. So there's untapped potential, and the way you find that is engage your team.
Excellent. So we've got a couple of key takeaways that you gentlemen have put together. Lee, if you want to show that slide, I think that as you've been typing it out, it's kind of spot on what each of our speakers has been talking about. It's been a great session, gents. What I heard from you were 4 positive takeaways. The first is strategically thinking about your business, getting that 13-week cash flow forecast, a proactive written plan with the ability to pivot when uncertainties occur. And last but certainly not least, communicate that plan. Very, very good thoughts and lessons and takeaways. I really congratulate you all for participating in this. So now I'd like to do is wrap this up and show our flyer for next week. What you guys have covered was a huge topic in a real short period of time, and I know you could talk for hours on it with your clients as you do. So here's the contact details. If you want to know more about anything that Peter, Mark, or Dominic have talked about that might have piqued your interest, just reach out to them. They'd be happy to have a conversation with you. And finally, I want to thank all of you who have dialed in for your participation and hope you can join again next week or at one of the upcoming webinars. As I mentioned earlier, we'll be doing weekly Wednesday webinars, 2 p.m. Through November 18. I'll be sending an email notice to each of you who've listened in on this webinar and include our panelists' contact information. So on behalf of Dominic, Lee, and our panel of experts, I want to thank you. I'm Warren Rutherford, and have a great day.
Thank you, Warren.